global markets were said to be breathing a sigh of relief as Donald Trump indicated that his proposed reciprocal tariffs were being reviewed and would not be imposed immediately. Meanwhile, the dollar weakened against major currencies while the price of gold continued on its upward trend. The Nikkei share average declined by 0.8%. The Hang Seng Index rose by 3.7%, while the Shanghai Composite Index ended up 0.43%. US markets rallied yesterday with big tech leading the charge. The positive close happened despite the higher than expected consumer inflation print released earlier in the week, a strong jobs number and continued talk about tariffs, this time reciprocal tariffs. The Dow Jones Industrial Average rose by 0.8%. The S&P 500 gained 1.04%, while the Nasdaq Composite Index closed up 1.5% in the black. All right, looking at the local indicators, we see that the all-share index is trading in positive territory. It's up 1.2% at 88,901 index points. In terms of our currency, we see that the rand is trading at 18.37 against the US dollar, 19.24 vis-a-vis the euro, and 23.11 against the British pound. On the commodities front, we see that gold is trading at $2,938 an ounce, platinum at $1,007 an ounce, while Brent crude oil is trading at $75.33 a barrel. So now we're going to get into conversation with Trevor Garvin. He's the head of multi-management at Ned Group Investments. Thank you very much for joining us, Trevor. So, of course, I wanted to get your reflections on the week that has been in terms of global markets. Lots of volatility with everything that's been going on. And why have market players seemingly chosen to see through the potentially inflationary prospect of Donald Trump's plans for further tariffs and a recently published higher inflation print?
Great. Thanks to be on your program and with your viewers today. And yes, certainly, I think it's been a really interesting week and certainly became a focus last night when we saw Trump starting to talk about his reciprocal tariffs now. Perhaps just to comment on these tariffs. I mean, tariffs is really a way where governments, I think, can raise revenue for themselves. And we know that the US is desperately looking to increase their revenue collection. It's also a way, and this is very much where President Trump comes from, a way of trying to protect US domestic industries and enhance the growth in the US economy. And of course, it can also be used as political leverage over other countries. And I think that's the angle that the US is coming from all three of these. What we saw last night, though, was President Trump talking now about reciprocal tariffs as opposed to what I guess we could say retaliatory tariffs. And really with the reciprocal tariffs, what he is stating is he's looking for fairness. And really what he is suggesting is that the US will implement a tariff that is equal and the same to the tariffs that any other country is imposing on US exports. So in his eyes, he sees this as being fair and equal to both countries. The one good part, and I think that's what also affected the markets yesterday, is he did announce a delay in implementing these tariffs or these proposed reciprocal tariffs and allowing all countries that have trade agreements with the US to negotiate and come to the party over the next few weeks to see if they can do a deal and minimize the level of these reciprocal tariffs. So I think markets priced that in. As a result, we actually saw the US 10-year bond yields drop slightly, pricing in slightly lower inflation expectations actually going forward due to this delay in the implementation of these proposed tariffs.
Yeah, Trevor, I really appreciate that explanation of what the reciprocal tariffs are all about, because we've been hearing about tariffs from the beginning of the year, and now there's this reciprocal. So it's effectively Donald Trump talking about the US imposing the same tariff level as that imposed against the countries that it has, trade relations with, which then puts them under pressure because if they're too high, they'd have to bring them down in order to still deal with America.
Yes, that's exactly right. So at the moment, not all countries have equal and opposite tariff levels to the US. So what you may find at the moment is that the US is only charging 5% tariff on a certain country's imports, but they charging 25% on the US goods going into their country. And President Trump is saying, no, this is not fair and reasonable. If you want 25, then we're going to charge you 25. But if you want to come down to 5, then that's great. And we'll also only charge you 5. And that's really where he's seeing this fairness in terms of these tariffs.
All right. Trevor, I wanted to ask you very quickly, because we're running out of time, as I gave you a lot of time to explain the tariff issue, which I think is very important for us to have context. Next week is the budget. The finance minister will be delivering that. What are the pressing issues for you that you'd like to come out of that budget?
Yeah, I think great question. And we all wait with anticipation for next week. I think it's going to really be a balancing act. We saw the South African GDP numbers showing an improvement from the past few years. So the South African economy is definitely growing a little bit quicker and better than before. The last number of years was growing at about 1%. And it looks like we may achieve around 2.2% GDP growth for the coming year, which is really great. It's still short of where we need to be at around 3.5% to really make an indentation into things like unemployment, etc. So we're looking for continued policies in terms of growth. However, he needs to tread a fine line between controlling the expenses and South African debt versus increasing taxes and increasing the state coffers or revenue. Because South Africa's GDP to debt ratio, he needs to keep constant and in fact bring it downwards to gain international investor confidence. So what we see happening probably is this balancing act between keeping debt and revenue roughly the same, but he's going to need to speed up his implementation of economic growth policies. And there we're looking at things like energy, transport, manufacturing, and of course the South African ports, which there are big programs out to improve the efficiencies in South African ports.
Excellent. And then there was light. Thank you so much, Trevor.
Yes, sorry.
Thank you so much for your time there. That was Trevor Garvin. He's the head of multi-management at Ned Group Investments.